Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 20th of August, 2018, just after 4:30 p.m. Central Daylight Time. Well, as you can see, the bull market and stock indices as a group continues. There has been a shift that's begun about a week ago. I think it culminated, to be honest with you, when Elon Musk made that tweet about Tesla and having the funding in place. And it seems to be that there's a move out of the FANG stocks going into other sectors for the time being. In addition, you got to understand where we're at. We are at the last third of the month of August, one of the most notorious low volume times in the stock market. We'll probably see a number of markets that just have a lot of volatility because of the low volume. And then in September, right after Labor Day, the market starts picking up its momentum. The kids go back to school and it's just magic how everybody in Europe gets back to their trade desks and we get back to work in America. Gold market got a good rally. And, you know, one of the things I've been looking at in gold is the amount of shorts. And I think we're at a record net short position if you look at the CFTC numbers. Could that be that the market's gotten itself too far negative? It could be. What else has been weighing on the market? Well, if you get my nightly news update, my trade recommendation, so to speak, tonight I go into large detail on the ending reserves, most current numbers we have on Turkey and Venezuela, and how they have been aggressive sellers in the market to support their countries, their currency, and so on, and how deep they have sold their gold reserves off. And maybe that is the problem that we've seen, that they have needed money so bad, and now they don't have the size reserves anywhere near them, to be honest, that they had. So if you get my report, I'm going to discuss that tonight. Another factor we did not see over the weekend, the president put more sanctions on Turkey. That drove, I think, the dollar down and lifted a number of foreign currencies, as that was widely expected after the Turkish courts rejected releasing Pastor Brunson. So we'll see what goes on. In the meantime, on a weekly area of chart of closes, the highest close we've had is 2874.60. We're all of 16 points away from that in the S&P. Why not go for it? That's exactly my thinking. You can see how the market's back up on a daily bar chart into the resistance that it's seen before. The pattern is still one of a lower low and a higher high right into that resistance. The market is staying over the 18-day average of closes, which gives it upside bias. The 200-day is far away. So where's the upper Bollinger Band as a resistance point? Well, it's here at the 2870.40 level, just close to 4 ticks away from the all-time high close that the market had at 2874. Are we overbought? Absolutely. So we have a market with upside momentum that is overbought. The bias is up, less a trading vehicle, and still very much in a sideways pattern up here. Will we get a Tuesday reversal off today's gains? Hard to know, but it's there if the market wants to do it. In the NASDAQ, the market has been trading at, I want you to look at this 18-day average of closes, almost every day now. It hit it here, 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 here. I don't think it hit it here, 73.90. Yeah, it missed it that day, but after that, every day it's been hitting it, and that's quite a bit. Is the trend up or down? Well, with the close today, it's 73.87, and the 18-day average at 73.86. There is none. While the swing line's down, the bias is up, momentum is down. The bears are trying to get the upper hand. And in the Dow Jones, you rallied back up to on Friday, and today you're trying to push out that upper Bollinger Band in an overbought market, trying to make the market lift a bit higher yet. When we get to the Russell, I want you to concentrate on the black bands. Those are the Bollinger Bands. 95% of the time, the market will trade within them. From sideways action, not markets that have already gone into a trend like this type of action, from this type of action comes big events. So I'm looking to see which way I think the trade wants to be long the market. The bias is up in practically every stock index. The question is, can the markets break out to the upside, or are they going to wait for a bit and see what goes on? As of, I think it's Wednesday or Thursday of this week, we will mark the longest bull market ever recorded if the stock indices don't fall apart, which I'm not expecting to see. The VIX. The VIX came down. If you'll remember when we were doing our daily charts, this was last Wednesday, and I kept telling you as the market was hitting the upper Bollinger Band that I thought the pros were selling it short right through here. That would have been the first time on August 13th, a week ago today, Monday. Then it pulled back, then it rallied back up, and I still thought they'd hold on, looking for prices to get back to the 18-day average of closes. The low on Thursday was 1282. That 18-day average was 1264. On Friday, the market got to a low of 1240. The 18-day average 1266, so it hit it, and that's where I think the pros came out. And today, you're slightly under that number. But that seems to be what the play has been. Selling the Bollinger Band top or selling puts. So that would be selling calls, selling puts to get back to the 18-day average if you get down. And so far, it's done pretty good. It doesn't mean it'll continue doing it. These are observations, not trade recommendations. In the bonds, I see the market running the upper Bollinger Band in an overbought condition with both numbers finally over 80. Now, if I step back, you didn't have that condition on Friday. Will the market embed? I don't know. But what I can tell you is we're at 2.82% in this market, the 10-year notes and the cash. Look at how this market's up. All we kept hearing was interest rates are going higher. As of tonight, it's running between 94 and 96%, the probability on the CME Fed Watch page that we're going to see a December rate hike, and about 69% for one in early 2019. Those are pretty strong numbers. And the market's built it in, and instead of rates actually going up, they have been pulling back. In TLT, still an uptrend, same situation. It's responding the identical manner. That is weighing finally on the dollar, which lost its embedded reading. This was the market on Friday. It had lost its reading then. It could not gain it back today, which I think sets up an eventual move of the price in the 18-day average this week coming together. That's what I think is going to happen there. I wouldn't be surprised if the euro does it. I just read an IFO report, by the way, on Germany's projected trade surplus for this year. Wow, it's only down 0.1% from last year. That is going to give Germany a big problem with President Trump, who's going to accuse the euro of being a currency. They're manipulating it down for the trade tariffs and, of course, the yuan in China. In the British pound, we're under a bit of short covering as the market's lifting up. It didn't lose its embedded reading yet, so I think the pros are still selling it short, but it could lose it tonight. I'd be watching this. If it does, do not be surprised if price and the 18-day average come together. In the yen, this market has become bullish again. Now, it is in a marketplace, if you look at the upper Bollinger Band and the lower, sideways action that's trying to break out to the upside. If you get further price pressure and it can lift out of this Bollinger Band, then the 100-day average becomes its resistance. The bulls have taken control of the market. In Bitcoin, I today did a TikTok article on Bitcoin, and by the way, there was another hack over the weekend. But the interesting thing and what could propel this market higher is there's an ETF that has been proposed that is based on futures contracts, not crypto exchanges. You know, a crypto exchange is just a fancy word, in my opinion, for a website. No more than that. If you think they're real exchanges, why don't you read about it? And getting it now based on a futures contract, well, that's a very different world. Will the SEC allow it? I don't know, but that would be a boon for the market, in my opinion. When we take a look at Brent versus WTI crude, Brent has taken the upper hand and did it as soon as it got over that 18-week average, and that spread has been moving back out in favor of WTI. When you come to the contracts of Brent, and I've moved to the OCC contracts, you got a higher high, lower low, so no trend. Resistance in two layers, 73.09 to the 100-day average, 73.72. Market's working off an oversold condition. WTI has got a different pattern. It's got lower highs, lower lows. That gets negated if prices take out 65.76. That's the numbers bears probably don't want to see taken out. If taken out, you might rally to this combination of the 18-day average at 66.82 to 66.73, the 100-day average of closes. Gasoline today, in my opinion, left its downtrend. Now it has a pattern of higher lows, higher highs. If you take out today's low on Tuesday or Wednesday, this would become what I call a bull trap and set up for another test of wherever the lower Bollinger Band is. Not taking that out could set up the test of 119.50, 193.50 to the 119.46 level, 194.60 level. I said that wrong, I know it. In looking at nat gas, you still are maintaining the embedded reading. Today's low was near an important 3-day average of lows which the market held. So as long as the embedded reading stays in place, even though you got a pattern of lower highs, lower lows, that isn't where the market's focused. It's focused, in my opinion, keeping that reading, which carries the market still to seeing buying on these breaks that gets well gobbled up. I'm going to write tonight a lot of detail about what's going on right through here. My reports look a lot like this. You can get them in two different ways. The commentary only, and or you can get the commentary with trade recommendations. And how we do this, and I don't know why we're getting this problem right here, but we are all of a sudden, you get it by giving us a call at 866-973-2077. You can go to our website at www.iraepstein.com. You can click up here if you're watching me on YouTube, and we're going to start presenting a new channel on Amazon Prime. So if you get videos there under the word Ira Epstein, we're going to launch a new channel for our Amazon viewers, something brand new, because not everybody's on YouTube, and I think you'll like to see that. And you'll see that I'm going to start putting up more and more videos. You'll have an actual channel there. I'm Ira Epstein. You have a good day. Thanks for watching, and I'll see you.